So, you're welcome to this presentation, this course. So, today we'll be talking about institutional levels. And in this course, we will explore a highly effective trading approach that focuses on identifying key institutional levels and other blocks in the forex market. By understanding these concepts and incorporating them into your trading strategy, you can gain a significant edge in the market. So let's dive in. So we're going to talk about the institutional zones and levels and how they work in the market and how you can utilize them to make trading decisions. Okay. So before we proceed, let's clarify what you mean by institutional levels and other blocks. Institutional levels are price areas that are closely watched by large financial institutions like the banks and hedge funds and the people we call market makers and all those stuff. Those levels often act as significant support or resistance zones, and they can have a strong influence on price movement. As you all know, that price reacts to some levels, and it tends to be a reversal or a continuation of the normal trend. Okay, this is an example of the zone that we marked. Okay, for me personally, I use lines to clear out the exact point that I will want to see price react. I use lines. I might use zones most times, but I use lines for precision. So we come back to this image. Okay, we are going to learn the introduction to institutional levels, definitions and characteristics of institutional levels, like what it looks like, and identifying it on chart and how to find it and make use of it. So, and we're going to understand the importance of institutional levels on forex trading as a whole. Okay, let's go. Okay, institutional levels refers to specific price levels in the market that are deemed significant by the institutional traders and investors. That these levels often act as major support and resistance. We all know about support and resistance and supply and demand and all those things. A large and these zones can be influenced in the behavior of market participants, institutional traders such as hedge funds, banks, and large investment firms. Closely monitored, closely monitor these levels and use them to make trading decisions. Yeah, so you have to monitor these areas. I'll have to take notes and mark them out. But it doesn't mean that price we have to place limit orders on them or anything. We just have to watch how price reacts there and make our trading decisions. So there are levels that are typically identified based on historical price action patterns and market psychology. There can be key swing highs or lows, fib levels like the 0.1%, the 0.1 level, the 50% and others, or important psychological levels like round numbers. Yeah, you should have learned this one on you know, the ICT there. In this lesson, we will use the high time frames from 1 hour to the weekly. Yeah, you can use the 15 minutes or the 30 minutes, but for higher probability, I will stick from 1 hour lowest to the weekly time frame. You can use any one of your choice. Also, you can use the 1 hour and the 4 hour. You can use the daily and the weekly and the 4 hour. Anyone you choose. Just you have to understand what I have to teach first. Okay. So characteristics of institutional levels. Characteristics of institutional levels. Okay. Number one, you have the quick reversal areas, a significant pause in an up or down trend. Yeah, we all know they can also be called order blocks because they are institutional zones where prices attempt to reverse. Okay. It's when it feels imbalance and broke structure and takes out liquidity. So don't worry, we are going to dive into the charts to spot this. Okay, how to identify institutional zones on chart. Let's go to our chart. Okay, here on this zone, in this area, this is the current chart on gold. So we have these areas of institutional. Okay, you can make use of zones also, but for me, this if I mark all these zones now, if I mark these zones and everything, if I mark all these zones, everywhere will be like it will be messy and but I choose to use lines. So let's just see how I use them with lines. Okay. Okay. For example, in this area, let me zoom out a little bit. This area takes a liquidity and reverse price. Takes out this area of liquidity and reverse price with an impulsive move. Therefore, we can call it an institutional zone. So we mark it out. And also this area also. So in cases you can mark the zones like this. Just I you can mark the zones like this so you can spot when price comes in between it. But me, I prefer to mark the lines. Yeah. Okay, I have here, I have here, this area here, and we have this area. This is a pause in the market, a pause in this up movement. Okay, and we have here, we have here also, but here we will congested in this area, but it doesn't matter. Doesn't matter. Let's go. We have here also. Okay, now we just have to look at how price reacts in these areas. You can see how price has been reacting from these areas. You can see how price has been reacting in these areas and here and here and also here and here also. And here we have here also. Here is also an institutional zone. Like you can mark this area that break this structure. I love to mark the lines. Okay, we have here also sensational areas. So now I think you guys have an understanding of these areas and zones and how they move price, how they tend to reverse price. Because okay, let's just make a trade example. of these zones. Let's just look into one of them. Okay, let's look into one of them. Okay. Okay, here in this area, you see how price reacts. You see how price reacts from this point of liquidity. You can go to the lower time frame, 15 minutes and everything. I see as price just tapped it initially and moved up. Then mostly we trade the New York section. So had it been that we are on this first day of the move, that after this news move hits the level, we can make our trading decisions here to take a buy. And as you can see, this thing went for a total of 140 pips, just this retracement. And meanwhile, the next day, let's check. You can see what happened there. And now in the New York section, because we only trade the New York section for the meantime, we trade the New York section. As you have known that price is reacting, from an institutional level, I will tend to go high. Here is another institutional level, and you can see what price did there. So I just want you guys to understand, and here also you can see what price is doing in that area. Okay, you can see this as price moves down from here, and now price is here. Also, we can still make trading decisions here. Now we have this area of institution also that takes out previous liquidity, that takes out all this liquidity, this area. So you can take a position here as you can see. As you can see, as price is reacting from the zone. This is just the institutional zones only. Just the institutional zones only. Like I've seen as price is reacting from them. So I hope you guys understood what I mean by these zones. You can make serious trading decisions around these levels and here also, but you have to wait for your entries. So you have to get, when we get to FQ candles and other blocks and entry types, that will be the last phase of this course, the entry stages, because that's where we focus on. That's where the money is. That's where we enter, and liquidity also. So our next class, we talk about liquidity. We talk about liquidity and how they relate to the institutional areas. Okay. Thanks, guys. See you guys in the next class.